The big story of the day is the Reserve Bank and Governor Philip Lowe saying that rates will now start to rise fast. So you went to the press conference today. What was the mood like there at that press conference?
Look, the mood was pretty good. I think the governor's going to be very clear now with his communication going forward, and this is my take on how I saw it. The Reserve Bank governor has admitted the RBA's reputation was damaged last year when it abandoned its yield target, designed to keep interest rates at record lows.
But the way the target ended in late 2020 was disorderly, and it did cause some reputational damage to the RBA.
That was when the governor gave the broadest hint that rates would not rise until 2024. Today, though, he warned that more rate rises are on the way, and soon. That's because he says headline inflation will peak at 7% in December this year, before gradually falling for the next couple of years. Philip Lowe also addressed the threat of recession. How likely is Australia for a recession? How likely is that?
The last 2 years has taught us anything. You can't rule anything out, but our fundamentals are strong and the position of the household sector is strong, and firms are wanting to hire people at record rates. Doesn't feel like the precursor to a recession.
The Treasurer has already said an independent review into the RBA is expected to begin later this year. Philip Lowe wanted an internally managed review, but Jim Chalmers wants it done by outsiders.
The board and the staff welcome the review. It's an opportunity for us to hear from others. It's an opportunity to learn and to hear people's perspectives. I'm not worried that it's going to dig up anything.
Today, the Treasurer said, despite the challenges, he remains optimistic about Australia's longer-term economy.
But we can't just pretend away these big challenges which we confront in the next 6 or 12 months in particular. It's possible to be optimistic about the future of our economy and the future of our country while also recognising that we have to navigate together a really tricky, really difficult combination of circumstances.
Which includes, it seems, a reset for the Reserve Bank.
So let's bring in here Deutsche Bank's Chief Economist in Australia, Phil O'Donoghue. And Phil, can I start with those possible reputation damages to the Reserve Bank? Long term, does it really matter or not?
Look, I think the RBA will come out of this okay. It was an extraordinary set of circumstances through the pandemic. As the Governor said this morning in that very important press release, we took out some insurance. Perhaps in hindsight it was too much, but at the time it was the right thing to do. Lessons have been learnt. I don't think we're going to see a yield curve control policy back in Australia anytime soon. Anytime soon.
So they're not going to try and control interest rates. What about the Reserve Bank, which is now going to be the subject of a review? Philip Lowe said he would have preferred to have done that internally. It's now going to be an external review when Jim Chalmers finally announces that. What is that really going to achieve for Australians and even the messages coming out of the Reserve Bank in the future?
Yeah, look, I don't think we're going to see much of a change in the operation, the mechanics, if you like, of monetary policy in Australia. For example, we shouldn't expect to see an interest rate at a different level as a result of this review. My sense is that probably the most important part of that review will be the composition of the board. This has often been debated for Australia. We have a relatively unique board composition.
In other words, they come from industry and business, which is one set of messages for the Reserve Bank, but then all the economics is coming from the Reserve Bank itself and not from external economists.
That's exactly right, and that is very unusual looking around the world. You tend to get more external voices challenging the internal central bank voice. So perhaps that's a sense, perhaps we'll see that changed out of the review. Not sure, we'll see what we get, but I think that would be something that I'll be watching very closely.
One thing I know that the Reserve Bank Governor and the Reserve Bank grapple with is transparency. Whether they're open enough, whether they're too open, just how do they try and strike this balance? Because it seems to me that other central banks, the Bank of England and the Federal Reserve, they communicate more regularly, they're more open to questioning than our Reserve Bank seems to be here.
Yeah, look, I've been very encouraged through the pandemic that we've had these impromptu press conferences from the RBA Governor. We sort of learn about them at the time that we get an interest rate decision. My sense, I wouldn't be surprised out of the review if we actually get those formalised. I don't want one every month. I don't think that is necessary. But certainly every quarter when we get a statement on monetary policy released, I wouldn't be the least bit surprised if we have a formalised press conference scheduled 4 times a year. an opportunity for the governor to be asked questions from economists, people like myself, and also from the media.
OK, there's one other aspect of this, and that is whether the Reserve Bank is beyond reproach. In other words, whether it is really something that nobody should question, can question, that they can never get it wrong. Because the sense is that even now they're admitting that there was mistakes made. And inevitably, if you're forecasting anything, there will be mistakes.
Yeah, look, that is exactly right. I mean, the challenge for any central bank, any economist, is to try and forecast where the economy, where interest rates, where inflation is going to be in 12 months' time. It's incredibly difficult in a normal course of events, let alone throwing in a once in a 100-year pandemic. Look, my sense is the RBA did its best. It had the right intention, and that was to support the Australian household and business sector to keep employment as strong as it possibly could. In the wash-up, perhaps mistakes were made. The RBA has acknowledged that. We'll learn from them and we'll make some changes next time.
OK, so I want to take to one very quick point, and that is that while other banks, the major banks, have their maximum cash rate at 2.25%, 2.5%, you've got yours at 3%. What does 3% do to the Australian economy?
Yeah, look, a 3% cash rate, I think there's a good chance we're going to get there by the end of this year. That's a contractionary policy stance, so a complete reversal of where we've been through the pandemic and previously, where policy was stimulatory. That's a contractionary policy stance. By definition, unfortunately, that probably means that next year we're going to be looking at a higher unemployment rate. Now, I know the RBA governor was hesitant to suggest that this morning. Look, my sense is that it's going to be it would be pretty remarkable for the RBA to pull off higher rates without getting higher unemployment.
I'll tell you what, Phil, great to have you on the program today. Phil O'Donoghue, Chief Economist at Deutsche Bank.